Hi everyone, welcome back to Corporate Decoder, the place where we decode the corporate world, one filing at a time. Today we're diving into Progyny's latest report. Get ready, because there's a few things in there that are interesting, almost like a surprise at a fertility clinic. This report gives us a peek at how Progyny did in the first 3 months of this year. We'll break down the key numbers and what they mean for the company. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for more in-depth discussion. This is Progyny's 10Q report, which is like a quarterly checkup on how the company's doing. It covers the period ending in March of this year. First up, let's talk about any legal headaches. Luckily for Progyny, there aren't any major legal battles brewing that would significantly impact their finances or operations. Now let's talk risks, those things that could really mess with Progyny's business. One big one is that Progyny might not hit its financial targets. Basically, what happens if they don't do as well as they said they would? The stock price could drop, plain and simple. Progyny operates in a super competitive market. They face competition from big insurance companies and smaller specialized firms. If they can't keep up, their business could suffer. Keeping existing clients happy is also super important. If clients jump ship, that's bad news for Progyny. They need to make sure their services are top-notch to keep those clients on board. Here's a tricky one. Changes in how people use Progyny's fertility solutions. If fewer people use their services, or if people start using different services, that can mess with their revenue. Progyny might try to grow by buying other companies or partnering with them, but these deals can be risky, they can be hard to pull off, distract management, and hurt the company's finances if things don't go as planned. In today's world, cybersecurity is a huge deal. If Progyny or their partners get hacked, that could disrupt their services and leak sensitive information. That could seriously damage their reputation and bottom line. Let's get into the financials. We'll start with the income statement numbers. First, their revenue. For the first 3 months of 2025, Progyny brought in about $24 million. That's up from $278 million in the same period last year, so they're making more money. But it also costs them more to provide their services. Those costs jumped to about $248 million compared to roughly $216 million last year. That's because fees paid to doctors and pharmacies are also going up. That leaves them with a gross profit, or profit after subtracting the cost of providing the service, of about $76 million compared to $62 million from last year. Now, running the company also costs money. Sales and marketing expenses were up to about $18 million. General and administrative expenses, that's the cost of running the business, were at about $34 million. After all the expenses are paid, they have a net income, which is pure profit, of about $15 million, which is less than the $17 million they made during the same period last year. They also measure income per share. On a basic share, it's 18 cents compared to 17 cents last year. Let's dive into the balance sheet. They have about $109 million in cash and equivalents, less than $162 million they had at the end of last year. So their cash position is down. They have around $147 million in marketable securities, which are investments, up from roughly $66 million at the end of last year. They are owed close to $300 million compared to roughly $35 million from last year. Now, on the other side, in terms of liabilities, they owe about $446 million to vendors. They also have operating lease liabilities, which is how much they owe on office space, of about $26 million. Now let's talk about the shareholder equity. The par value of the common stock remains at about $9,000. They have additional paid in capital money raised for stock of about $612 million. They are holding accumulated earnings of about $159 million. Now let's look at the cash flow statement. They spent about $2.8 million on equipment and about $14.6 million on marketable securities. They sold about $63 million in marketable securities. They didn't buy back any stock this quarter. Overall, their cash position decreased by $48 million for the quarter. They said they have almost 10 years of weighted average on their leases and roughly 5% on average in interest payments. Now, in terms of accounting, they adopted some reporting improvements and segment disclosure requirements. They operate and manage their business in one operating segment. Finally, they bought the benefit bump in January to help serve the needs of families better. Now, looking at these results, Progyny is showing revenue growth. but their net income is down. They're spending more on running the business and income from investments has decreased. They have plenty of cash but spent quite a bit on investments. While the increased investment might be a good sign of future growth, the increase of the expenses might become a problem in the future. Alright, that's our breakdown of Progyny's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.